Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, Memorial Day, May the 27th, the year 2019. Let's talk trading. I'm going to stick with what's on your chart. What is on your chart and how did it get there? I just got finished listening to this video. And the reason I say listen to, because there really wasn't much of anything to look at. It was for this new indicator. Alpha indicator, something like that. ALFA. Now, why would I take the time to listen to this? Well, never know. I might learn something new. And I like to see if somebody can actually produce something that, beats a turn trade or beats the buy zone. But I also I listen to the message and how they frame it. And it was so funny because they talk about how this will put you on the same footing with experienced traders. This is a shortcut. This makes it easy. Well, I mean, if that doesn't raise a red flag or set off the alarm, I don't know what how you have your BS threshold calibrated, because it's just not going to happen. There's no shortcuts. I mean, most of the stuff that's advertised and sold is usually producing a shortcut, whether it's in trading, whether it's at the gym, whether it's health. People aren't willing to do the work necessary to achieve the results. And that's why most people live lives of quiet desperation. They are afraid to work on themselves. In fact, I'm going to do another video, maybe even today while I'm thinking about it, that has to deal with the things we do versus the things we know we really need to be doing or should be doing. I hate using that word should, because there's really no shoulds in the world, but some things like taking care of your health, you know, kind of fall in that category. But be that as it may, when it comes to trading, there's just no shortcuts. There's no secret other than the fact that at all times you have to employ money and risk management. Now, if you go back to some of my early posts, say around 2008, 2006, 2005, maybe even as early around 2004, when I first came up with the buy zone, I used to say stop losses are for sissies. But that's because I was trading the buy zone, and built into the buy zone is if you go long, then all of a sudden you get the short signal. Well, what do? I mean, if you're long and you're getting a short signal, you got to exit that trade and at least and go short, because if you stay in a long trade when you're getting a short signal, you're just setting yourself up. So that's why I used to say that. But now that I'm doing other methods, I don't say stop losses are for sissies, because if you don't employ the stop loss and there is no automatic reversal trigger, you can get yourself into a lot of trouble and wind up, blowing your account. Let's take a quick look here, and looky here, all filled. I showed this last night that I think there was four to still open. So, and I remember, I'm pretty sure one of them was the pound dollar. So you see that's filled. The euro yen, what we're tracking here, you see it didn't quite make it into the upper wick zone, and it's pulled back 25 pips off the high. Still down for the month, but we're up for the week and the day. And you see here, remember we opened below previous day's midpoint. We went up through it. Guess what? We came back below it again. Now, you can see we've put in a pretty anemic range for the day, but it is a holiday, so really don't expect much. We're still below. The first trading day of the month opens for the last 12 months, and we're still below the opening range for the last 12 opening day ranges of, for each month. Okay. Inside bar. You see, we almost triggered along if you're taking this trade. Not quite close to it. We're 27 pips away. So we're within 2 pips. And I really hope you didn't jump the gun. Don't jump the gun on these types of trades or you can just get your fingers burnt. And once again, pretty anemic range, 33 pips. Almost 100 here on the new beast, the pound yen, 96 pips. Not bad on a holiday. And you can see here, though, we had the monthly D1 or the D1 lowest open for the month right here. You see, we put that in and then it touched it and ran up, touched it and ran up. Actually, in both cases, it penetrated but crossed back above. So that's something to think about. And remember I mentioned turn trades early. So you see here we're putting in a top, green candle followed by a red. That's a turn signal. And so you can see here you can either go short at the close of that candle or at the low. And you can see there once again what happened afterwards. And now here at the bottom, we have another turn trade, red followed by a green. So you can either, trigger at that high, and you can see here it's come back up. And so right here at this turn trade, you can see it almost touched and reversed. So I'm still, if anybody wants to tell me about trend, which, is in the eye of the trader, because we're just looking at H1 here. But the nice thing about the turn trades, these patterns occur. They have to occur for price to reverse. So whenever you see that, we could put the day up and you can see here, that's what we had a turn trade here, price went up, had a turn trade here, price went down. And so you can see here, we're putting in turn trade here, went up again. Looks like we might have another turn trade. So tomorrow would most likely signal a long bias based on turn trades. Pivot point, once again, within the buy zone. So there's no bias based off of the pivot, but you can see here there was a trigger long and some more long triggers, but just not much profit to be made. It's a holiday. Rat zone, no rat zone, not enough range. And we did take out the pivot. You can see here, we had taken that out yesterday. So we're still ways away from these 2 pivots to see which one's going to get taken out. In fact, we're 100 pips away from this one, right on the money. Price action. There's not much price action really on the holiday, except we did put in a 1 ball here, red at the line. Was good for 10 plus pips. You see here, 2 ball at the line, or 2 ball at the bottom, so green at the line, good for a couple of pips. Oh, and that other indicator was promised, it was promising, 50 pip trades and 30 pip trades and hundreds of pip trades. And it talked about using it on the M1 and M5 time frame. traders, I've said it before, but I'm going to have to say it again. It bears repeating. The only true chart is a tick chart, and all the other charts are data compression. Whether you compress a bunch of ticks into 1-minute bars or candles, or 5-minute bars or candles, or hourly bars and candles, or daily or weekly or monthly or annually, it's just a bunch of compressed ticks. You're not trading charts. You're not trading on charts. You're trading price. And if you don't understand that, then the matrix has you. The trading matrix has you. You're buying in to something that isn't real. Price is real. That's what people are willing to pay at that time, at that moment in time. And that's all there is. So you put a trade on the 1-minute chart, well, guess what? Price is the same on all charts. You think if you flip to the hourly chart, somehow price is going to miraculously change? Sorry, it doesn't work that way. So those people who talk about trading on the M1 and M5, sure, that's what you're looking at, but you're not trading the chart. You're trading price. And speaking about price, you can see here how trading price at the line, just the direction, bagged you a few pips a couple of times. And once again, it's just anemic today. You can see here, it's just spotty. When you see these types of gaps here, trading is just not really happening. I mean, look at the spread here. That's not a normal spread. But once again, it's the holidays. And I had up this handy dandy highs and lows chart. But once again, because of the way price is today, the trading, it's not really going to show us anything. Support becomes resistance, resistance comes support, or they hold. You can see here, this held, we put in a high here, but then it held here. So that's what this, I guess I need to show which indicator this is. It's the 2017 price action support resistance. And all this indicator does is it looks for within a tolerance, how many times, if a high repeated itself, if a low repeated itself, or if a high became a low or a low became a high. So here we had support became resistance. So 40 bars ago, this was a support level. Price came down, put in a low, and then it became a resistance level 9 bars ago right here. You see price came up, hit it, and reversed. So that's how that indicator works. It was just something I was kind of curious about. I think somebody was talking about support becoming resistance and double tops. And like I said, these all have tolerances, that indicator. So you can say, make it as tolerant as you want. And this one, I made it exact, but you can put it within a tenth of a pip, a whole pip, and sometimes you get more lines if that's what you want. Because since we're doing points and not pips, it's kind of ridiculous. But hey, you have to go with the flow and use what you have. Looking at these other charts, just frequency distributions and the range. You see, yesterday I think we were here. We hit the ATR2 plus a half of the ATR2 plus the open. So once again, seeing how price moves, frequency distribution and frequency distribution of the range. You see here, you've only got 33 pips. So maybe later today it'll move. I doubt it because we're already getting ready to wrap up in New York soon. So today is just a holiday. So there you have it, traders. And just remember, it's not what you trade, it's how you trade it. So for today and the rest of the week, rest of the month, just go out there and drain the banks.